Hey, I'm Gene Goldman. Here's a look at the week ahead for the week of October 14th. So there is an investment saying that earnings drive stock prices. So basically it means that strong earnings generally result in stock prices moving higher. So last week we did get some early earnings reports for the third quarter, primarily from banks, and they look pretty good. This week we are going to get a ton of earnings reports. So let's discuss why earnings are so important and what is expected from this earnings season. So valuations are pretty high. Valuations today are pricing in absolute perfection. One common measure of valuation is called the price earnings ratio, or PE ratio. This is basically the price of the stock market up here divided by the stock market's earnings. Of course, lower is better. But as you see here, the PE ratio for the S&P 500 is well above its long-term average. It's okay to have high valuations, but you need low inflation and low interest rates. Right now, we have neither of those. So we need to see a rise in earnings, the denominator, to move up to help push market valuations a little bit lower. So what is expected for third quarter earnings? So if you look at FactSet, and FactSet is a financial database that tracks lots of financial information, they said on June 30th that earnings would rise 6.5% year over year for the third quarter. This is per analyst estimates. Now that number has gone from 6.5% down to just 4.5%. And this is likely due to slowing spending, lower inflation, and just an overall economic slowdown. So if we dissect earnings data even more to see which sectors are seeing the most revisions, we grab some data, as you see here, from our friends at Bespoke. And this data shows the net pace of companies seeing negative versus positive revisions by sectors. And the three worst are energy at negative 70% negative revisions, materials at negative 30%, and consumer staples at negative 24%. These three sectors are likely going to see the biggest earnings disappointments, in my opinion. So as earnings reports get released, I will focus less on the actual number, but more importantly, what company management says regarding the consumer. Are they pausing on projects before the election? What are their hiring plans? And with inflation slowing down, how is this impacting their profit margins? So the overall takeaway, earnings can help drive stock prices. Earnings season begins this week, but it's not a good sign that estimates have been revised lower by a pretty wide margin. I hope to get some really good insight on how companies are operating in this very uncertain environment. Thanks for listening. For more information, please follow us on X at Cetera IM, and see you next week. Thank you so much.